Ladies and gentlemen, Kim here. Welcome to the special update for tonight's analysis. I wanted to inform you guys that there will be no videos going into all next week. I am traveling back to Minneapolis. I'm currently in Dallas. I'm going to be traveling in Minneapolis. I'm going to be spending my summertime in Minneapolis. And so I'll be busy traveling. I'll be busy packing things up. I'll be busy unpacking, setting up my trading station, things like that next week. So there will be no video all next week. So I think this is a good time for me to put out this special update for you guys, looking at things, secular trend of things, right? So, you see me analyzing the short-term market fluctuation on that 65-minute chart on a daily basis. Also, several days ago, I looked at kind of a primary term trend analysis I've done several days ago. Now, what we're gonna do is we're gonna look at secular trend of things, and we're gonna look at the big picture of this market. And it is all coming up right now. All right, so what is the secular trend, right? Secular trend, when we talk about secular trend, we're talking about, when we're going all the way back, going through the, you can see there 1970s to 1980, right? About 20 years or so, there was that bear market we saw. Once we saw that, breakout right here, back in 1985 or so, 1980s, right here. This is when the secular bull market was born, right? Again, this was in a bear market, but once we broke out of this, what we call a megaphone pattern, right? Prior resistance acting as new support. Keep in mind, my long-term moving average is that's a secular trend moving average. You hear me? If you've been watching my 65-minute chart analysis, you hear me saying micro-term moving average, short-term moving average, mid-term moving average, yes? Now we're looking at secular term trend moving average, and that is this right here, that blue moving average. So you can see how once we got into the bear market in 1970 and 1980, you can see how we got out of that bear market with the cultivation of a primary term higher lows, but the crucial level was right here, 1980s, right? Once it broke above the megaphone pattern right here, we came down and retested it right there. Prior resistance acting as new support and coinciding with that secular term moving average. That's why I put that little, red arrow there. But keep following that arrow. So this is when the secular uptrend was born, with that retest and breakout. That was 1985 or so, right? So we have to, the reason why we have to understand the secular trend of things, because within the secular uptrend, there will be a correction so severe, so significant, so steep, that so many people will be thinking that the recession is here, bear market is here. I want to first say this. What I analyzed in this video, in this analysis, I'm not saying this is 100% guaranteed that I can have to see the future, how this all gonna pan out. Obviously, nothing is guaranteed in life and in the stock market. What I'm saying is these facts I'm going to give you. Do we have high probability that what could potentially happen that I'm going to propose in this video? Well, that everybody right now in the camp that this market is now possibly getting into a recession, because that's what I'm hearing everywhere else, including mainstream media, social media. So same thing happened just a year and a half ago during COVID, right? So what I'm giving you is just kind of a kind of a historical data of when the trend is up in the secular trend of things, do we have a higher probability that trend could continue, right? Nothing is guaranteed. I'm not saying I can see the future, none of that, because nobody can. If anybody's guaranteeing you anything, you better run, because Bernie Madoff guaranteed 15% regardless of market. Nobody can guarantee you anything. This is life. There's a reason why I have to say this in nowadays, because people are crazy. Anyway, so what I'm saying is that's a bear market. 1970s and 1980s. Same thing happened here. We got 2000 all the way to about 2015 or so. When was that crucial point that this market kind of broke out of the bear market and started its own secular trend, or born as a secular bullish uptrend? That was right here in 2015 and 2016. You can see prior resistance acting as new support. And you can see, keep that in mind, secular term moving average, right? There's that red arrow there. And that was when? 2015 and 2016. That's when it was born as when this market broke out of the bear market. Because remember, this is a recovery phase. A lot of people want to look at this. They kind of like to measure from the lows of the crash of 2009 and then say that, well, this thing got up too much. Keep in mind, back in 2015 and 16, people are calling for a recession 2015 and 16. Keep in mind, 2017, 18, 2020, people are calling for a recession. Today, they'll do it every single steep corrections, right? How many of you think shoulda, coulda, woulda? What if I bought in 2011? I didn't because I was scared. What if I bought in 2012? I didn't because I was scared. What about 2015? Oh, market is up too much, right? Remember, S&P 500 was at where? 1800. It's still up here. So you missed out this entire move because why? Because you thought we're getting into a recession. So we have to understand the secular trend of things, right? So this is a recovery phase after crashes right here back in 1970s, 2 crashes here, 2000, 2008, and then there's a recovery phase. So this market truly born as a new secular uptrend in 2015, right here, similar to 1985. And then we saw nice swift move similar to here. Very, very difficult market we got into in 2018, 19, and 20. Much, much more brutal than what we saw 1987 Black Monday, because you can see that swift, it was a very, very fast move, right? You can see that move here, right? Very, very fast, pretty much a parabolic move. And then we saw that 35% correction. That's a 1987 Black Monday. In 2020, right? That's what I call 2020 COVID lows. That's what I call modern day 1987 Black Monday. That's 2020. That's how I call the bottom. That's how I was able to accumulate crap load of stocks. That's how I was able to achieve a record-breaking performance for my portfolio, because that's how I was analyzing it. And you say, well, okay, but look at that. Well, that thing broke below your, secular trend moving average. And if you've been listening to me, my 65-minute chart analysis all these years, since for the last year and a half or so, you know what I always say. It's not about price getting slightly below the moving average. It's the trajectory of that moving average that's important, because it tells us the trend is still higher. So despite the fact that during COVID, we just blew right through it, the trend, the perceived trend is still going up. Yes? So trend is assumed to be in effect until it gives us a clear signal that it has been reversed, right? So 2020 lows, COVID lows, right here, right? We got slightly below it. We kind of V-shaped higher. We got right back up. But what did we establish though after the COVID lows and then when we got up here? kind of like 1987 Black Monday. We came down very, very hard. Everybody talks about. I mean, you know, if any boomers out there, I mean, they talk about when they, you know, when they went through 1980s, they talk about how horrible it is. Not a lot of people are talking about how awesome it was to buy the dip and hold for the next 10 years and then get like 5, 6, 7, 800% gain. NASDAQ did 1,400% gain, right? No. 1,000, not more than that actually. 1,000 like 600% gain. 1,600% gain. If you bought NASDAQ, not a stock, if you just bought NASDAQ, you know, entire index for your index fund back in 1987 near the lows, and if you held it for the next, I don't know, 13 years or so, you'll be up 1,600%. Nobody talks about that. Why? Because majority of people miss out because they got scared as hell. Nobody's thinking about buying. Nobody's thinking about holding. Everybody is thinking about barreling. So every time there's steep corrections, always, I don't care if it's a mainstream media, social media, your neighbors, your Uber driver, your restaurant people, or just people on, I don't know, Whole Foods, they all gonna say, this is so horrible, I'm so miserable, oh my God, this is so bad, this market is too crazy, we're gonna get into a recession. Trust me in this, I heard it every single corrections. That's why every single one of you, so many of you, even though market is up from here to here and you got nothing to show for it because you're trading in and out, you're getting off freaking out every single corrections, missing out opportunities and missing out subsequent rallies that come later. So what I'm saying is right now, if this is 1987 modern day Black Monday, the 2020 COVID lows, then this must be 1990. And that must be modern day 1990 here at 2022, right? We're just kind of right in that vicinity here. So you have to understand that what's the definition of an uptrend? Secular. We're looking at things secular, guys, not 65 minutes. When we're looking at secular trend of things, secular, what is the definition of uptrend? Higher lows and higher highs. Pretty basic. Higher lows, higher highs. Higher highs. Higher lows, high, low, low, high, low, high, higher lows and higher highs, right? This is in higher lows and higher highs. That's a bear market, right? Secular bear market. Yes, secular bear market. This is in higher lows and higher. There are crashes here, lower lows here, right? We finally got that first higher high 2015 and 16. Same thing here. Higher high 1980s right there. So after COVID, what happened here? That's a higher high. That's low, COVID lows. We're in the vicinity. Again, I have to make this disclaimer. I don't know where the top, I don't know where the bottom is. It could be here. It could be way lower, right? It could be 3,000. I don't know because no one does. But I just want you to kind of think about these things, right? I want you to think about these things, especially if you're, you know, inspired to be more of a long-term investor because you've been day trading, short-term trading, you've been being in and out, you're just getting chopped to death, and market is up. S&P was last time several years ago, you know, S&P was what, 1,500 something like they got to 5,000 now, correcting down. What if it goes to 7,000 next 7 years? Again, I don't know. I don't know how the future is gonna pan out. You know what I'm saying? I cannot see the future. I'm not guaranteeing anything. Yes, I'm just, let's kind of look at the secular trend of things and understand trend is assumed to be in effect until it gives us a clear signal that it has been reversed.